Good morning and welcome to ShareTreck. This is Raj here. This is a new segment just on fundamental analysis. Today is the 31st of August, and as I start this recording at around 7:30 a.m. in the morning, the futures and pre-market activity were green. The tendency of markets is generally to bounce back after losses as participants feel that the prices have fallen enough. Yesterday, we started with a similar configuration. Pre-market activity was green, but quickly it lost steam, and Nasdaq ended down 1.11%. I think that's the same thing that we have in store for today. And in this particular video, I'm going to talk just about fundamentals. The previous video that I already dropped in the channel, I have spoken to you about the technicals. So the fundamentals out here indicate that the Eurozone inflation came in at 9.1% as against an expectation of 9%. This is a record high for Europe, and not only is it over and above the expectation, it's a highest ever inflation rate that Europe has had. We should now expect interest rate hikes from the Eurozone, and we should also start hearing talk from the European Central Bank about ending the quantitative easing and potentially starting quantitative tightening to work synergistically with the interest rate in order to mop up liquidity and ease inflation pressures. When that happens, we have to refocus our attention on Portugal, Ireland, Greece, and Spain, because those are the countries which were having fiscal weakness in the past. So let's not lose sight of them and be proactive in keeping track of what's happening out there. Meanwhile, in the UK, Truss is going to be the front runner to win Conservative Party leadership contest and become the next British Prime Minister. And she has expressed in the past a desire to curb the central bank's independent decision making on interest rates. I think this would mean that the monetary and fiscal policy would be in the hands of executive and be susceptible to political influence rather than economic need. And that, I think, is going to be bad. We'll have to wait and see what happens out there. Also, let me take a brief break to just announce that NASA has announced that they would attempt to launch Artemis on Saturday. And I think that if that happens, I'm going to host a live stream just like I did before for the launch. And I hope to see you there. Few of you had joined me in the live stream when I did for the initial launch event, and it was a lot of fun. I'm hoping to see you there. Now back to the economic news. The Jolts report yesterday showed that the available positions which are unfulfilled at this point of time is at 11.24 million, and for this is for the month, and against which we have just around 5.5 million workers who are looking for a job. This indicates a very tight labor market. However, I think that if the pay was good, there would be more people available to work. We still have a situation where people have to work multiple jobs to keep their heads above water. Take the case of teachers who are leaving the workforce, as not only does it not pay enough, but despite using their own funds to buy supplies, they are now required to take additional responsibilities and are subjected to some in some places to political risk. So that's the situation which takes out a lot of teachers from the employment sector. The healthcare sector also had professionals leaving the workforce due to burnout during the pandemic. The rise of unions is a sign that workers have had enough. And I think that is what underscores the current numbers, because after a point of time, people who have been looking for jobs end up giving up searching for jobs and start something of their own, which is a precarious employment. Regardless, if the labor statistics continue to show tight conditions, the government will be politically forced to import low-cost labor, and that alternative would not address the root cause, and in my opinion, that would be a wrong move. The other alternative then is for companies to pursue automation to increase productivity with less employees, and that would play right into Cathy Wood's thesis, because Cathy Wood was saying that automation will take place to solve problems. Even now she's saying the same thing, so that will also come true. Apart from that, Cathy Wood had also mentioned that there is going to be excess inventory, obsolete inventory, which will have to be sold at a discount, and that will tamp down on inflation. We already seen that happening, because when the big box stores and Target and others announced their Q2 earnings, they had mentioned the excess inventory that they are liquidating, and they've also spoken about a soft quarter going ahead. So that's the situation overall, my friends. So when I look at the overall economic situation, it's not looking that great. Now let us zoom out and look at the geopolitical situation. And when we look at the geopolitical situation, first of all, on top of the mind is Russia-Ukraine crisis. It's still going on. Ukraine is now on the offensive, trying to take over Target adjacent to a river. And when it does that, it's going to weaken the Russian position. and that could potentially force the Russians to talk about using chemical weapons or something like that, and that could cause a little bit of trepidation in the market. So that's ahead of us. I don't know when that's going to happen, but it can happen this week. And then the other thing that we have to keep in mind is the Nord Stream gas has been turned off by Russia for some maintenance, and that means Europe is going to face a brief hiccup, even though they have got almost close to 90% of the energy that they need, the gas supply that they need for winter, but their current needs need to be fulfilled, or else they'll have to dip into the supplies that they have accumulated. So that's another crisis brewing out there. And then, of course, we have the China situation, where they have economic problems, as well as zero COVID policy, which is creating issues for the Chinese government. So that's already there in the back burner. Further to that, we have Pakistan almost 1/3 underwater because of heavy floods, and they're also looking for a bailout from IMF. So that's a crisis out there. We have Sri Lanka again, still negotiating to get some kind of relief from IMF. That's also going on out there. And apart from that, we have 3 African countries which are already in famine, and they don't have food because of drought conditions. And we have the hurricane season also picking up. So those are all the aspects out there. And coming back closer home to the US, we have the Department of Justice publishing a response to the Trump petition regarding the Mar-a-Lago search. And that is very sketching, and it's going to disclose how what Trump has said publicly contrasts with what has actually happened in a legal perspective. And that's also likely to create a lot of stress in the political environment. We have the midterms also going on. So my friends, the reason I'm recounting all these things is that if you zoom out and look at the overall perspective, I don't see any reason why there should be optimism in the market at this point of time. But just if you look at genomics itself, there are bright spots like Bluebird. Definitely optimism is worth out there. Verve also has got a lot of things going in its favor. So there are some pockets of optimism out there in the genomics, but it cannot stand isolated from the overall sentiment of the market based on geopolitical and economic realities. So that, my friend, is the context in which you have to look at the technical analysis that I published earlier. And this brings me to an end of the video. If you like this video, please press a like out there. It helps YouTube promote our channel, and we need that a lot. And if you're not yet subscribed, please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.